British pound sterling, often simply called as the pound, is one of the oldest currencies in the world. It has been in continuous use for centuries, and it serves as the official currency of the United Kingdom as well as several British overseas territories. Its influence expanded globally during the British Empire, cementing its role as a major reserve currency and also a key player in the world of economy. The UK was formed through several unions, starting with the 1707 Union of England and Scotland, creating Great Britain. In 1801, Ireland joined to form the United Kingdom of Great Britain and Ireland. However, following the secession of the Irish Free State in 1922, the modern UK was established, consisting of England, Scotland, Wales, and also the Northern Ireland. At its height, the British Empire controlled vast territories across Asia, Africa, and also the Americas and Oceania, leaving a lasting impact on the global trade, culture, and also economics. After both World Wars, the UK economic power waned, leading to the decolonization of many territories and a shift from empire to a modern globalized state. Today, the UK is a constitution, monarchy, and also parliamentary democracy, continuing to exert influence particularly in finance, trade, and also culture. Geographic location and strategic significance. Geographically, the UK is an island nation located off the northwestern coast of mainland Europe. It consists of Great Britain, which includes England, Scotland, and Wales, as well as Northern Ireland. It also comprises smaller islands like the Isle of Wight, Orkney, and also Shetland. The key historical and economic events, and also the recent economic challenges. First, we have Industrial Revolution, 1760 until 1840. The Industrial Revolution, which began in the UK, marked a major turning point in history where innovations like the steam engine and also the mechanized textile production transformed the UK into the world's leading economic power. During World War II, it brought widespread destruction, but the post-war period saw reconstruction on efforts funded by loans, including the Marshall Plan from the US, and these events led to shifts in the UK's economic landscape. Next, we have the European Union membership and also Brexit, 1973 until 2020. In 1973, the UK joined the European Economic Community, EEC, benefiting from integrated trade and also economic policies. However, in 2016, a referendum led to the UK's departure from the EU, which officially completing Brexit January 2020. This departure disrupted trade, reduced access to the EU single market, and also increased regulatory burdens on UK businesses. And also, we have the COVID-19 pandemic, which is 2020 until 2022. The COVID-19 pandemic hit the UK hard and causing a GDP contraction of around 9.9% in 2020. And lastly, we have the Russia-Ukraine war, which is during the 2022 until present. The recent economic developments. Looking at the present day, inflation and monetary policy, which rising energy prices, labor shortages, and also post-Brexit inefficiencies have driven inflation above 10%. In response, the Bank of England has raised interest rates, making borrowing more expensive. Next is energy transition. The UK is investing heavily in renewable energy sources, aiming for net zero emissions by 2050. While the UK narrowly avoided a recession in 2023, growth remains stagnant. Exports have been struggling due to the new trade barriers of the post-Brexit.
The first one is main imports and exports. The UK's trade structure plays a key role in the GBP's value. Major exports like oil, gas, pharmaceuticals, and financial services remain strong during the pandemic, while imports of food, electronics, and machinery showed its reliance on global supply chains. So disruptions during the pandemic caused trade fluctuations impacting the GBP. So next is principal trading partners. So key trading partners such as the United States, £182.6 billion, Germany, £134.9 billion, China, 12.5% of imports, and France, £94 billion, significantly influenced the GBP. Disruptions in trade with these partners during the pandemic reflected the interconnectedness of the UK economy. And lastly is cooperative advantages. So the UK's strong financial hub, skilled workforce, and leadership in pharmaceuticals helped stabilize the GBP during the pandemic. So innovation and resilience in high demand sectors like healthcare ensured economic recovery despite any initial challenges. So in summary, trade partnerships and economic strengths shaped the GBP's performance during the pandemic.
Okay, so the next one is the type of foreign investment. So for the type foreign investment, the financial services, technology, energy, and real estate are the main areas of foreign investment in the United Kingdom. So the significant investment in residential and commercial real estate is drawn to London in particular. Foreign venture capital is strong in the technological sector, specifically in biotech, artificial intelligence, and fintech. Okay, for the fifth point of the economic overview is the financial regulations and trends. So the United Kingdom financial regulations are concerned with the operating model, that risk and compliance transparency, consumer and anti-money laundering. This industry is under the monitoring of FCA, which has started checking the international financial transaction after Brexit. And then for the next point of the economic overview is the high unemployment and weak currency. So unemployment brought on by the pandemic decreased consumer expenditure and demand for the money. And less active economies with limited investor interest tend to have weaker currencies.
The pandemic caused soaring unemployment, straining households as essential expenses like food and utilities left little income. Emerging markets struggle with depreciating currencies, while advanced economies manage stability better. The crisis underscored the need for balanced fiscal measures and long-term recovery plans. Moreover, currency and political risk also plays a role in GBP economy. The GBP, while sensitive to political and economic changes, remains a strong international currency. Political risks like Brexit-related trade disruptions and Scottish independence movements may impact UK stability, but these are offset by the country's robust economy and strategic geographical location. Lastly, high unemployment and rising inflation impact on GBP economy. The pandemic forced many companies to shut down or scale back, causing global unemployment to surge and leaving households in severe financial distress. Most income was spent on essentials like rent, food, and utilities, with little left for other needs. Winter were especially harsh in colder regions, where heating costs added to the burden of reduced incomes or job losses, amplifying economic stress for already struggling families.
Now, I will be presenting about currency determination, performance, and issues of GBP during the COVID-19 pandemic. There are two types of currency exchange rates, which are fixed exchange rate and floating exchange rate. In this case, the British pound sterling (GBP) is a floating currency. The COVID-19 pandemic, which began in December 2019 at the seafood and poultry market in Wuhan, China, rapidly spread across the globe, impacting public health, social structures, and economies worldwide. Many global currencies were affected during the pandemic, and GBP was no exception. There are three major events that lead to significant changes in GBP currency rate. First, on March 11, Bank of England cut its main interest rate from 0.75% to 0.25%. Next, President of the United States, Donald Trump, imposed a travel ban from Europe, and World Health Organization declared that the COVID-19 outbreak as a pandemic. All these three major issues led to the pound to dollar rate decrease from $1.2857 to $1.2537 on March 12. On March 18, Rishi Sunak, the Minister of Finance, announced a £330 billion stimulus package to help the citizen and boost economic activity. This move raised concerns about the significant rise in UK government borrowing and led to pound to dollar currency rate to decline from $1.2051 to $1.1548 on March 18. On March 23, Boris Johnson, Prime Minister of the United Kingdom during that time, announced the first in a series of lockdowns. The pound to dollar rate hit its lowest point, which is $1.1475. However, GBP slowly increases and becomes stable in early January 2021 despite the UK entering its third lockdown. This is because the UK have successfully rolled out their vaccines for their citizens. As lockdown become increasingly accepted as part of the new norm, the effects that lockdowns have no longer affect the citizens and the currency.
Slide, there are three graphs that show the pound sterling performance. We talk about the purple one, which is view United Kingdom's exchange rate against USD from January 1957 to May 2023 in the chart. So next is volatility of British pound, which is GBP. The fluctuations in GBP were influenced by the instability of the UK political landscape. Brexit debate caused GBP value to waver as the UK pursued departure from the European Union, which is EU. Uncertainty arose from the lack of conclusive trade agreement between the UK and the EU. Let me highlight the key event impacting GBP. UK, which is officially exists the EU on January 21, 2020. Transition phase left unresolved trade agreement, heightening investor uncertainty. But judicial instability add further pressure. Resignation of key political figures create doubt about policy consistency. Overall impact, political and economic uncertainties lead to the significant GBP value fluctuations. The GBP and the USD spot and forward rates also indicate the current value of GBP in terms of USD exchange on the same day. The GBP USD forward rate is quoted today for delivery and payment on a specific further date. Next is the exchange rate analysis from 2016 until 2024. This chart depicts the exchange rate of the GBP against USD from 2016 to 2024. Focus on trend and notable event from 2018 to 2023. Next is the trend of the GBP or the downward trend. The overall GBP against USD trend shows a decline, reflect a weakening British pound relative to the US dollar. Other than that, the notable fluctuation, which is Brexit, happened in 2016 to 2020. Significant declines and fluctuations due to political uncertainty and economic implication on the UK's exit from the EU. And what makes the pound sterling worse is the COVID-19 pandemic, which happened in 2020. A sharp depreciation of quote due to global market instability caused by the pandemic, post-COVID recovery, and the energy crisis that happened 2021 to 2020. Recovery in 2021 was followed by decline in 2022, driven by inflation, supply chain disruptions, and the Ukraine war's exacerbation of the energy crisis.
Now let's move on to the performance of GBP in 2024. The influences on GBP in 2024, the inflation in 2022 to 2023 weakened GBP due to energy prices, supply chain issues, and geopolitical tensions. The recovery efforts in early 2024, the Bank of England raised rates to 5.25% to stabilize inflation, attracting investments but still slowing growth. And then the inflation challenges. Despite the efforts of the Bank of England, the inflation stayed above the target. On October 2024, reported highlight uncertainties from energy prices, wages, and interest rates. And then the Brexit impact. Unclear that UK and EU trade ties cause investment uncertainties and GBP volatility. But despite that, the performance and resilience of the GBP became out the second best G10 performer with 4.5% gain versus euro despite a 1.41% drop versus USD. The smallest decline among G10 currencies, showing strong resilience. And then the monetary policy progress. BOE made progress in disinflation, but then the domestic inflation pressures remained. In conclusion, the British pound sterling, or GBP, reflects the UK's economic evolution, transitioning from an agriculture base to global trading powerhouse throughout the Industrial Revolution. Despite the setbacks like the Great Depression, World War II, and the 2020 pandemic, strategic recovery efforts have demonstrated the UK's resilience. Today, strong trade activities and key agreements uphold the GBP's strength despite ongoing volatility.